Before I explain anything, let me take you through the withdrawal of my second payout consecutively in a matter of weeks. And if you stay long enough to the end of the video, I promise to share with you nuggets that will help you flip the game in your favor as well. I used to fail many challenges, but right after I stopped doing the things I used to do and do things I do now, things are much, much better. So join me. Let me take you through the withdrawal process. After that, I promise to drop the nuggets. So the total amount realized after the trading period is $253.57. So when we check the dashboard in the payout session, you realize that it is only $202 that we can withdraw. This is because we are taking only 80% of the $253 profit we made during the trading period. Actually, the withdrawal is a very easy process. All you need to do is go to the payout session that we are already on. You click on request payout. You select the account, click on next. You choose the payment method, and my preferable method is USDT. Choose a network. Then you input the address. So over here, I'll just go to my Binance, copy my account number, then input it here, and click on next. So at this point, they've sent an OTP to my phone. Just check it out, confirm. And that is it, as easy as that. At this point, I'll just wait for them to disburse the money. And the last time that I did this, it took less than an hour. And I hope this one is also fast-tracked like the other one. That's why I love FundingX so much. They actually pay within 24 hours. And when they don't pay you within that stipulated time, they offer you $1,000 more. So even if you're withdrawing only $20, which is their minimum amount you can withdraw, and they don't do within 24 hours, they're actually going to pay you $1,020. They actually almost always stick to their promise of paying within 24 hours. Okay, so things are actually getting better with this firm because I completed the withdrawal process. My time here around 10:57 p.m. As you can see, just within 5 minutes, I got the alert that the money has been disbursed. And to confirm this, you can see I had 0.00 USDT in my Binance. Now it's 198. So I think there was a little bit of percentage deduction for the transaction. We can see that here in the history as proof that it was disbursed just now, just today. You can see today's date, the time, 10:59, 197 actually. So it was so swift, less than 5 minutes. I requested for a payout and I got paid. Simply amazing. All right, so now that we are done with the withdrawal process, let me drop the nuggets. The very first thing I want to talk about is risk management. Yes, risk management should be paramount to every trader. Why? Because your number one job as a trader is to first protect your capital before you even think of making profit, because without capital, there is no trading. So risk management answers questions like how much am I risking per trade? How much am I willing to lose in a day, in a week, in a month? Where should my stop loss be, and so on? And that can only be answered by data. When I say data, it means by backtesting your strategy to see your win ratio. That can give you an idea of how much you can risk per trade. I, for one, I risk 2% per trade in a challenge phase. And when I pass, I risk 1%. And it's not based on luck. It's not based on assumption. It's based or it's backed by data, because I back tested my strategy for over a year and I front tested it for over a year. When I say front test, I mean I live and demonstrated it for over a year. In fact, the same strategy I used the whole of last year, which earned me 9 winning months out of 12, which is remarkable. So yes, risk management is very important. You cannot also determine your risk on a trade based on your emotional state as a trader. be it being in a losing state of mind or in a winning state of mind. When you are having losing periods, it's very easy for you to over leverage and over risk to cover up for your losses. The same way when you're in a winning period, it's also very easy for ego to get inflated for you to risk much more than you want to. In any case, your risk should always be the same. Whether you're in a winning period or in a losing period, your emotions should never ever determine the amount you want to risk per trade. A typical example of what I meant by not allowing your emotions to run your risk for you in a trade is in my previous video when I spoke about how torrid my first week was when I lost my first 3 trades after I passed my challenge, and I didn't panic at all. I just stuck to the plan because I knew that no 2 trading days are the same, no 2 trading weeks are the same. Each week is very unique, each day is very unique. So I just stuck to the plan, knowing things will turn around. Then the following week, everything started to click again. I made winning trades, I recovered all my losses, made profits, and I was due for a payout at the end of the trading cycle. What am I trying to say? Had it been that I reduced my risk because I was scared that I was going to lose the next trade due to my losing streak, I might have spent the whole of that trading cycle trying to recover losses, whereby I could have just stuck to my initial risk and recover the losses with time and make profits, which I did at the end of the day. Finally, on risk management, I would like to advise that no matter your strategy, always try to employ positive risk to reward ratio, because trading is a very, very psychological game. It is hard as it is. You don't want to go into a trade knowing that when you lose 1, 2, 3 trades, you would have to work harder to recoup your losses and make profit at the end of the day. So employ a negative risk to reward ratio to me is a no-no. Always have a positive risk to reward ratio. Personally, I use 1 to 2 risk to reward ratio, meaning when I lose 1 or 2 trades in a row, one win can give me all my money back, if possible, with some change. So I would always advise when you are employing any form of strategy at all, always have in the back of your mind to have a positive risk to reward ratio embedded in your strategy. That will do you a whole world of good. Now that we are done with risk management, let's move on to trade management. Risk management is actually determined before the trade, but after you enter the trade, we now talk of trade management. That is things that you do whilst the trade is what? Ongoing. I'm only going to talk about the technique that works for me. You can also practice and see if it will apply to yours as well. Anytime you're in a trade and the trade is going against you, tendencies are very high that you would like to hold on to that losing trade, hoping that it reverses. On the other hand, when you're in a winning trade, you're actually very scared that you will lose that amount you've made. So you quickly close it. But for you to make it in this industry, you need to quickly change that mindset, or you come to a very disastrous end, as I've seen in the years when I was a novice trader, where I keep my losers running for longer periods than my winners. So this is how I handle it. I enter a trade, and my risk to reward ratio, as I said, is always 1 to 2. But then anytime my trade runs into 1 to 1 risk to reward ratio in my favor, I move the stop loss to BE level, because it's very annoying for your trade to run into profit and later on reverse to hit your break even and then to stop loss. I would rather not take a loss after my trade has gone so far for me to my profits. I'd rather just put my stop loss at a break even level, because as I said earlier, trading is a very psychological game. The moment you start hitting losers from winning positions, you may try to revenge trade. So to keep things safe for me, I just put my stop loss on break even. After that, I look forward to the trade going to at least 1:1.5 level. When it gets to 1:1.5, the trade begins to hit differently, because from there I put my stop loss on 1:1 level, meaning anytime the trade reverses against me, I will always secure my 1:1 risk to reward. But should the trade move on into my profits further, then I'll secure my 1:2, because also it's very annoying for you to win a trade. The trade goes so far for you, about 1:1 into 1:1.58, and for it to reverse and hit your break even or even stop loss. So that is what I do for my trade management. You can also backtest this and see if you can apply it to your strategy. And also, if you have any trade management techniques out you think works better than this, feel free to share it in the comment section so that we all learn, because I'm trying to build an all-inclusive community where we can learn from one another. So to the very last point, and not to say it's the least, is what I call avoid trading into obstacles. We often hear the trend is your friend and all that, but it's also very important not to trade into obstacles. Well, and what do I mean by obstacles? With this, it's a bit technical, so we'll go into my chart so that I demonstrate what I mean by trading into obstacle. Okay, so let's use this example to explain what I mean by not trading into obstacle. So this is the 1 hour time frame for gold, and this blue line here is actually a major resistance from this price level. As you can see here, price went up from here up to this region here. I've marked them all with blue lines. So let's imagine I'm a trend trader and I'm waiting for structure to be broken. Price actually moved from this region and broke this major structure here. That will show an impending buy momentum or buy trend. I don't know what your confirmation or your bias or your edges. Let's say you enter your trade around here where this blue line is. So your safe bet is it should at least get to this level, since price in the past started from here and ended up at this point. But then you can notice a rejection from this price level here. Let's put line here. You can notice that the price were rejected from this level. So you'll be wondering why, how did this happen? Well, this is where my obstacle comes to play. And what is this obstacle? Let's move our time frame to the daily time frame. So you can see that prices run into what this daily supply zone or daily imbalance, depending on how you want to call it. Although prices didn't move to our safe area region, which is around this place, it got rejected from this point, and it's due to this obstacle here, which is the what daily imbalance. Just assume that I got an entry around here, thinking at least prices should move up to this point where the blue line is, and it just got rejected from this point and moves down to my stop loss. You know, it should be very annoying. You'll be wondering what happened. And this is exactly what happened, because you ran your trade into an obstacle, which is a daily supply zone. This is just an example. There are many, many examples. This could happen either ways. It could happen when trades are coming down into a demand zone. For the daily time frame, you might think prices will get to somewhere here, but actually price can get rejected from here, which is the daily demand zone. So always be careful not to run your trades into obstacles. Okay, so that being said, thank you so much for staying to the end of the video. Please like and subscribe if you have learned anything useful from this video, so that I can keep doing more of the same. See you in the next.